bear with me. But the work doesn't stop. We got to get these loans in and get you guys in your houses. Um, the lending process is pretty straightforward. I'm not sure how much you've already spoken about, Jane.
Nothing about the money.
Okay.
I said when you join, you would let people know where they need to be at as far as credit score, tips as far as what to pay, what not to pay, because tax season is approaching, and anything else as far as the home buying process. I was waiting for you because you are the money lady.
Okay. So you're always going to come and start off with me. Most people call their realtor first, and then their realtor will send you to the lender. The first thing is to get you pre-approved. We need to know your buying power, and we need to know that you're going to be able to buy this house at the end of the day. So I may be a little different from other lenders because I go through your application as if I'm an underwriter, and I make sure everything is there. We dot our I's, we cross our T's before I write your pre-approval, because that makes the underwriting process, once you do find your house, it makes it so much easier. We start off with credit. My number one question is going to be credit. Even though credit is just a small piece of what you need, we start off with asking you, what's your credit score? We want your minimum score to be at about a 640 to get decent pricing. And when I say decent pricing, I mean like interest rates. Your interest rates all depends on, one, your credit, two, your county you're going to be in, and your loan amount. So
Hold on. For the viewers, I love that you touched on that topic, but can you go back to that for 5 seconds about how interest and credit are paired together and why it's important that the higher your credit score, the lower your interest rate will be?
Yeah, it's going to save you some money because you're proving to these lenders that you are responsible with your previous debts. That's the whole point of your credit score. They want to make sure that you're a responsible buyer. Even if you had some life instances or occurrences to happen in the last 2 years, we'll work around it because they understand we're human. People get sick, people lose jobs. We just came out of a pandemic. So don't be too caught up on your credit. As long as we see that you've gotten back on track in the last 12 months, you've been consistent, then you'll likely get approved for a loan.
Can you go back on that one that you spoke on when you said medical bills?
Medical bills, yeah. We don't, the underwriters don't really care about medical bills. They don't count them in your debt to income ratio. They won't ding you for them, again, because we know that life happens. They don't want to penalize you because you're sick and you don't have a way to pay. So medical bills, usually they'll ask us to write a letter if it's something more recent, and we just explain what happened. You don't have to HIPAA laws. You don't have to go into your medical diagnoses and all that, but just explain, hey, I got sick, I got in an accident, I had to take off of work. That's what happened. I'm better now, and I'm back to work. So,
all right. And what's our magic credit score number?
640 or higher. That's where we want you to be, but we can get you approved at 580. But 640 just makes the process a lot better, and it'll get you a better interest rate.
Viewers that are watching, what is our magic down payment assistance number?
620 or higher.
And that's why you should have the 640.
Right.
We can guarantee and make sure that we're skating you right in. I've had a client before, guys, that had a 619, and we were 1 point away from getting down payment assistance. So if we get you above that threshold, we know that we can definitely do that for you. Saundra, do you have any quick tips for people when it comes to their tax returns and home buying?
Tax returns. If you're self-employed and you're using your tax returns to buy, please be careful on what you write off, because you could have made $500,000 last year, but if you wrote off 350,000 of it, then your income goes down to 150,000. So right off, listen, we have expenses and you want to get your tax breaks for it. I get it. But we do have to average your taxes over the last 2 years. So that's why they came out with these new loans, like the bank statement loans, the profit loss loans, the no doc loans, because people were writing off writing off their expenses, and you rightly you should, but um, once we looked at that bottom line after all of your deductions, then people weren't qualifying that way. So we do have alternatives for that. But those of you who are W-2 employees and you're expecting a refund, save it, please. Don't go shopping. Don't buy.
We don't want to hear you say that the interest rates are high, but you just blew your tax return check. Okay. And don't go take your tax return check and try to pay your credit off.
No.
That's what I was waiting for you to come online to discuss. A lot of people wait until their tax season comes and thinks, oh, I got my tax check. Let me go ahead and just pay all my debt off. Right. Saundra, what do you have to say to the good people about that?
Do not pay off any debts until your lender has looked at your credit, because a lot of that stuff can make your credit go down. It doesn't initially make your credit go up. Yes, it looks good on paper to be debt free, but it will affect your credit score at the end of the day. So please make sure you talk to your lender, talk to me first before you pay anything. Because a lot of things that we look at, especially if it's 2 years or older, it's not going to affect you as much as you think it would. But there have been some instances where we had to hurry up and get somebody's score up because they needed to buy quickly. And we've had them pay things off. But 9 times out of 10, we won't make you pay anything off. So just let us look at it first.
Or if you do pay things off, because she is well versed with looking at your credit, and as a mortgage expert, she has a mortgage what if stimulator that will let her know. We'll get you that question in 1 second, Olivia. We know that if we tell you you could have something that is $300 and we don't want you to pay that down to a zero. Saundra may want you to pay it to $24, not 25, not 23, but 24, because the calculations and the simulations let us know that that's what we need to do to get you to the score she wants to see it at. So Olivia has a question. I'm going to say my part on the question, and then I'm going to let Saundra take the floor as well. And the question is, does it matter what bank your lender is with, or is it better to go with a credit union? My answer as your realtor is that I prefer to work with people that I'm partnered with. You are legally allowed to choose your lender, and you can choose anybody that you want to choose. But when you choose that lender, you have to look at the parameters. What are their operating hours? If I'm going out on the weekend, are they open on the weekend to write a pre-approval letter? Because very quick, without going too far into it, when we go looking at a house, if you're approved for $200,000, easy math, easy numbers, but the house we find is $175,000. We don't want that seller and the other side to know what our buying power actually is. We want to be able to write at $175,000. So if you go with a credit union or per se a bank that has traditional banking hours, when we want that pre-approval and we want to write on that house, it makes it a lot tougher. Saundra, any extra insight?
Yeah.
Besides the fact that I can call you and you're on your way to Myrtle Beach on a Sunday afternoon.
Right. That is, yes, brokers are better. You go to a credit union or a Bank of America or something like that, you only have products from that one place. We have products. We have over 300 loan programs that we can put you in because we work with a multitude of banks. So we're brokers, and brokers have the ability to save you money. Whereas the brick and mortar banks are stuck with only 3 or 4 products that they can offer you.
And banking hours.
Yes.
So those are 2 things that are very imperative. Choosing a proper lender. Thank you for bringing up that point, Olivia, because if you all notice, I do a lot of work with Saundra. Although I do have other lender options, but that is because not only have her and I been working together for years, you have to be able to trust your money partner. You have to be able to know they can get your clients to the finish line. You have to know that they're willing and able and capable of getting your client to the finish line, because that is what's important. Anybody can say, hey, here's a pre-qual. You have lenders that will actually throw something against the wall in hopes that it sticks. And you have to remember that on the realtor side, we don't see your finances. We don't see what's going on. So we're thinking everything's tracking, everything's on board. We're closing. And then boom, we'll get to the table and you can't close because your lender wasn't being proactive along the process.
Right. Right. So that's why I stress the fact that I look at your file as if I'm an underwriter. So you are pre-approved when you get a pre-approval from me. I even take it as far as to run it through the automated approval system, just to make sure that we get an approval back and nothing shows up as a surprise once we get into underwriting. Some people get a little bit annoyed. Well, why do I have to do that? The other lender ain't make me have to do that. Because I want to walk into a house, fall in love with it, get your offer accepted, and can't close your loan. That is a hurtful feeling. Like, there are stories of people that packed up a U-Haul and sitting in front of the house and they can't close their loan. No, we don't want to do that. So that's why I take the extra mile to make sure that anything that I think could come up that could be an issue, we'll address it up front.
I'm sorry, I was giving Olivia your number.
Okay, perfect. All right.
Saundra is capable of 48-hour turnaround time as long as you have the necessary documents that she needs. She's capable of telling you what you need to do to improve your scores if your scores are not where they're at, where they need to be at for you to purchase. Our process goes off of you. So if it's it can take some people 30 days, and sometimes it could take longer. We are here for the long game, everyone. We are not fly-by-night professionals. We are in the game for longevity, which means that for your interest and for what you need to do, we are here for all of your real estate needs, and all of your real estate advice. Don't go to your cousin who bought a house last month thinking that they can advise you, because every situation is uniquely different. Every client file is not the same. It's just like we all have different fingerprints. Mm-hmm. We all have different circumstances when it comes to our home buying.
Yes, there are not two loans that came in my door that were the same. Guidelines are the same. Guidelines are black and white, but everybody's situation is different. And not to mention that the loan programs change from month to month sometimes. That program that they got 2 months ago may not be available today. So the industry is ever changing. And when things happen, like interest rates go up, then they create a new program like the 3-2-1 buy down, to try to get people to try to keep the market moving and to keep people buying homes. So
real quick, I know that we discussed the 3-2-1 buy down last week when we spoke. Before any new viewers that may be watching and that are currently concerned about what interest rates stand, can you give us a short overview of how you all are able to help with the interest rates?
Yes, the 3-2-1 buy down is you buy your interest rate down 3% the first year, 2% the second year, 1% the third year, and then the fourth year you go back to your regular rate. So, for example, let's say I quoted you 6.5% as of today. Your first year is going to be 3.5%. Second year, 4.5%. Third year, 5.5%. Fourth year, 6.5%. So that saves you a lot of money. This money to buy down your interest rate by that 3 points has to come from your seller. So instead of using the seller concessions for your closing costs, you're going to use it to buy down your rate.
Right. So one of the beautiful things about that is that's something that I write into the contract. It will be on paper, and it's something that goes into your real estate file, that it was agreed upon that your seller knew that you were buying down, that they were helping you to buy down your rate. So to answer the question, we can help you with down payment assistance and get you a lower rate than what you're currently paying. And then the most important part about the 3-2-1 buy down is that 90% of the time before that fourth year comes around, you would have refinanced out of that interest rate. So when the market does change, you've appreciated in value, you've gotten some equity in your property, and now you have a lower interest rate. So, and you don't pay as much money to buy down points.
Right.
when you do it this way. And isn't it something about the monies that was saved, Saundra, if you go with certain lenders, that a portion of that money can be refunded back to you or goes back into the principal of the loan?
Absolutely. So
Okay.
how it works is when the seller gives you that money, it goes into an escrow account. So the lender who lent you the money is going to get paid the full amount. It's not going to look like you're paying 3.5%. They're going to get paid because it's pulled out of that escrow account. So that money is sitting there. So let's say you can refinance in as soon as 7 months. So let's say you refinance in 7 months, but you still have all this money sitting there. It's applied to your mortgage and it's applied to your principal balance. So you still have that money.
So that is one of the beautiful things about it. So as you can see, everyone, there's a lot of various tools, tips, and information. We probably could stay on live all day, but we're not going to do that because we know that you all have other things that you want to do and that you need to do. But we want you to know that most importantly, no matter what you need when it comes to real estate, whether it's investment properties, whether it's hard money loans, whether it's soft money loans, and for those that don't know what soft money loans are, since we don't talk about investing a lot, I'll give you 3 seconds on that. Some people don't need hard money. Hard money is when you go to buy a house and you're not necessarily using credit. You're more so using the equity and other things within the property to purchase. When you do that, the lender will give you a rate and be able to help you with cost of construction as well as purchasing a house and give you the cash to purchase the house essentially. And you're given a term to pay that lender back. Hard money, a lot of times, is expensive. Well, for our investors out there that is watching, Saundra does have programs that will afford you the flexibility to not utilize hard money, but utilize what we call soft money, which means that if you have a different credit standing or say that you're an experienced investor or things like that, we don't have to go through the hard money options for you.
Yeah, there's more stable products, and hard money usually for people that are going to flip a property or get something quick. And then we do have the DSCR loans for those of you who want to buy and hold property. Because right now, Wall Street just bought up millions of houses, like
Yes.
family houses that they're holding on to because they know where the market is about to go. So if you want to be an investor, get in on this DSCR, and you do have to have your credit up to, I'll say a good rate is 680. You can get in at 640, but the rate is going to be ridiculous. And we don't need any income docs. So we don't need to see your taxes, none of that. The income is the rent that you're receiving on that property. Minimum 10% down, could go all the way up to 30% down. A lot of investors want to buy, but they expect 100% financing. You got to have some skin in the game. So make sure you put together your partnerships, get some people along with you that you all can go in and you can eat off this. So it's a great program.
So my words for today that I'm going to leave you all with is very simplistic. People utilize real estate for wealth. People utilize real estate to become wealthy. Real estate is one of the safest vessels to become rich, and there is not one wealthy person that you know that does not own some type of real estate. That's all for me for this Money Making Monday. Saundra, do you have anything that you'd like to part with?
Buy the house. Because people, I'm gonna wait till the interest rates. Wall Street didn't wait. Y'all don't understand what's about to happen. If you want to buy, now is the perfect time. Buy the house, keep that tax returns, use it for your expenses. Buy the house.
And that's what we're going to leave you all with. Buy the house. Don't think you're going to outwait the market. There's a cost associated with waiting, and you will lose anywhere from $25,000 to $50,000 thinking that you're going to wait a year to purchase a house. So you thinking, and then not only that, the market's everly appreciating. So that $310,000 house that you got approved for this year will probably cost you about $400,000 next year, and you will be bought out of the market.
Yep.
And I say it with a smile because I'm so serious. We do appreciate all those that have watched. Saundra, can you please let the good people know? I've put your information in the comments before anybody that wants to jot down or give Saundra a quick call. Saundra, can you tell them how to reach you, please?
Yes, you can reach me at 301-326-7555. You can reach me on any of my social media platforms. It's at Saundra Fenwick Mortgage. And go to my YouTube channel, guys. It's saundraspeaks.com. And I have all of these videos on there to give you information about how to get started, different programs we offer, et cetera, et cetera. So thank you.
All right. And for me, I'm going to say, if you're looking to purchase, rent, invest, whether residential or commercial, or buy your first flip, or get you a buy and hold, anything and everything that is associated with real estate, you could give me and my team a call. I have agents that are licensed DC, Maryland, and Virginia. For those that say, oh my God, January is so busy, please remember I am a broker. So I do have licensed agents, DC, Maryland, and Virginia, who will assist you and take great care of you in the same capacity that I do. If you have questions, you can call me at 202-802-1559. Or you can inbox me. And that's about it for me, because I don't do pre-approvals. I'm going to tell you, go to www.approvemesandra.com.
Yes, please. I forgot that one. Sorry.
Well, with that being said, everyone, thank you for tuning in. Feel free to reach out if you have any further real estate questions or any real estate needs.
All right. Thank you, guys. Have a good day.